capital flows to the emerging markets, which has actually remained pretty healthy, as you have said. And with the US Fed now really looking at, the rate cut over a period of time, how can the emerging markets tackle the challenge of the likelihood of a sharp rise in the capital flows of the economic parameters, including exchange rates and all?
I think you are right, CB, with the expectation in the market very clearly embedded that the Federal Reserve will be easing. And in fact, the market is betting that the easing cycle will be both sharp and aggressive. I don't know about that. But if that is indeed the case, and the good emerging market credits will definitely see capital inflows, which means we have to be very sure about the ability of the economies to absorb that capital productively. Again, I go back to the 2003-8 period. India experienced a massive surge in capital inflows, and some of it couldn't be digested. Of course, now we are a much bigger economy. We can do that better, a lot better than we could do at that point in time. So I don't think the risk of the episode of 2003 to 8, a surge in capital flows leading to unproductive investments, that probability is on the lower side. However, and I mean, as economists are always supposed to speak with two hands, not just one hand. On the other hand, therefore, I have to say, if the Fed rate cuts also end up sort of getting coinciding with the rise in risk, rise in uncertainty because of geopolitical events, then the question is whether the rate cuts in and of themselves will necessarily result in capital flows, because other things are not remaining constant. So the last time when the Federal Reserve had its massive rate cut cycles post 2008 crisis, or in 2001 and 3, etc., the global political environment was nowhere near as fraught as it is today. So therefore, it is going to be a big question mark whether this time around the rate cut cycle will lead to a big jump in capital flows as it has happened in the first decade and the second decade. Therefore, I think emerging markets should not be betting on it. And if it does happen, then the question is, we have to make sure, not just India. India has done a much better job than other countries. We have to make sure that it doesn't lead to one more cycle of accumulation of hard currency debt, resulting in debt distress down the road.